Welcome to the weekly market analysis. This segment explores the performance of Indian equity markets during the final trading week of 2025 and first two sessions of 2026. The market ended the week with a notable upward surge, with benchmarks scaling new all-time highs on Friday, driven by broad-based buying in key sectors and a positive start of the new year. We'll delve into the key drivers of this week's market movements, analyze sectoral performances, and provide insights into what traders and investors should consider moving forward. The Indian stock market ended the trading period on a strong note despite a cautious start to the week amidst muted cues and a year-end profit booking. The benchmark Sensex surged to close Friday at a record high of 85,762.01, a weekly gain of approximately 0.67%. The Nifty 50 also scaled unprecedented peaks, closing at a lifetime high of 26,328.55, a weekly gain of approximately 0.7%. This broad based rally on Friday was primarily propelled by a strong performance across banking, realty, metals, and auto sectors. Broader markets mirrored the cautious undertone for the most of the week but ended with overall gains, reflecting strong investor confidence moving into the new year. Several factors influenced investor sentiment this past week. FIIs remain net sellers, offloading equities worth 12,444.8 crore during the week. However, the selling pressure was absorbed by robust DII activity and strong retail participation. A key driver was the impressive 25.8% year-over-year increase in passenger vehicle sales in December, confirming economic growth momentum and boosting the auto sector. A global commodity rally, particularly in precious metals like silver and gold, provided support for metal stocks. Additionally, a government push for domestic electronics manufacturing through the approval of 22 investment proposals under the PLI scheme fueled optimism in tech and manufacturing sectors. The India VIX, a gauge of market volatility, saw increase to 9.45 by Friday, but sentiment remained broadly bullish. Sectoral performance reflected the broad-based buying interest this week. The banking sector emerged as a significant outperformer, with the Nifty Bank Index reaching a fresh all-time high of 60,150.95. The Nifty Auto Index also touched an all-time high of 28,803.65. Power and metal sectors were among the top gainers, with Coal India and NTPC leading the Nifty 50 gainers on Friday. Conversely, FMCG stocks remained under pressure, with ITC being the biggest laggard on the Nifty 50, followed by Kotak Mahindra Bank and Nestle India, as selective profit booking was observed in defensive stocks. From a technical standpoint, Nifty 50's break above key resistance level and close at a record high indicates a strong bullish bias. The index formed a strong bullish candle on the weekly chart. Key support levels are now seen in 26,150 to 26,200 range, while resistance is expected at 26,450 to 26,500. The market is expected to remain in a bullish to sideways trend, with stock specific actions likely to dominate trade as participants look forwards towards the upcoming Q3 earnings sessions for near term guidance. This analysis is based on information available as of January 2nd, 2026, and market conditions are subject to rapid change. Investors are advised to consult with a financial advisor before making any investment decisions. Thank you for joining us for this week's in depth market update. Stay informed, stay cautious, and we will be back next week to continue our analysis of the market movements. Thank you.